morning, Carissa, and welcome to our land from your land, which is now in Australia for a while. I'm sure you're enjoying the existence of a different world, and so thank you for accepting my request to interview an amazing personality like yours who has dedicated her life and mission from a cozy job to creating and helping the entrepreneurs of the world, if I may say so.
Thank you so much. It's happy to be here, and thanks for having me.
Yes, and so what I wanted to do today is to be able to seek your thoughts and guidance to our entrepreneurial community, who, of course, as you have rightfully said throughout your mission, that have a lot of tools in what to do. And yet, based on your assessment and the statistics, the success rate of entrepreneurship hasn't moved the needle a lot. And yet the percentage of entrepreneurs all over the world are increasing because they read people like the top five or richest people in the world are entrepreneurs. And they are not the corporate executives of, and please don't take the wrong way, the IBMs or the stuff, but they are the entrepreneurs. So that itself, that greed for all of us as entrepreneurs is one of the missions of an entrepreneur. So my request and my communication and my conversation with you is together how with your created SLAP program, and I want to ask you about that, to enhance in the upcoming future the probability of success of these entrepreneurs by providing them the tools of what not to do in entrepreneurship. So please tell us about yourself, Carissa. You have been an inspiration to a lot. Please tell us how you came about it and where is this mission now taking the organization called SLAP, which is obviously, I want to make sure that I say it is Silver Lining Action Plan.
Perfect. Very well said. Yes. Well, thanks again for having me. And, I feel like any entrepreneur that's telling the truth does have a story full of what not to do in it. And so, my journey, like everyone else's, has some really amazing highlights and some things that have been really fun and that I'm proud of, and lots of lessons and learnings along the way, and lots of things that, now I know because of hindsight, but, that I would offer to other people what not to do. But the short version of the story is that, as you said earlier, I had a job in business development for a big ad agency in Canada. I'm originally Canadian. And one day I was at a small business networking event, and I kept talking to these small business owners who were so passionate about what they do, who were so committed to what they do, but who were really struggling pretty consistently with profitability, with sustainability, with, living the life that they wanted without feeling the stress of being a business owner. And I kept thinking to myself, if I could just help them with business development, if I could help them with the thing that I am kind of good at, but that I'm doing in a big business, would that make a meaningful impact in their life? And so I quit my job on a bit of a whim, and all of a sudden, I always say ignorance is bliss. I naively started my business at 22 years old with this really big mission, which is that I wanted to help more people make money doing what they loved. I wanted to have a meaningful impact on actually helping, these business owners who are so courageous and so brave, who take this massive risk to go.
So stupid at times. I could say also so stupid at times. I'm just kidding.
That's definitely true. I always say I am definitely not the smartest person I know. I may be the dumbest. I may just be the person that's dumb enough to keep going when everyone else would have stopped. So yeah, I think you're right. I would put myself in the same category. So that started this long journey of trying to understand, why do so many businesses fail? How do we help them succeed? As you articulated really well already, there's so many training programs, there's so many mentorship programs, there's so many books, there's so many courses. I mean, there's so much information that you would think that that would result in a higher success rate, right? You would think that the volume of information teaching businesses how to grow would equal success, but it doesn't. And I have a lot of theories about why that is, as I know you do, and we'll talk about that. But really, what I came to realize in my journey is that two things. One, business owners are incredible. I am sort of grateful and inspired every single day by their tenacity and their resilience. And I always say, if we could make the journey a tiny bit easier for them, we would increase the success. They're incredible. They work hard. There's no better risk than small business. These are the people we need to be investing in and helping succeed. But at the same time, right, it is really hard to grow a small business. And we don't just need to keep talking about business skills. My background's in psychology, and that's sort of been the big aha in our world, is that we realized that if we can wrap behavior change science around a business owner and give them structure and support to help them hit their goals, that changes the dynamic entirely. And so in my own journey, even when I've made my biggest mistakes, it hasn't been because I didn't have the right knowledge. It's been because I didn't have the right support. I didn't have the right outlet. I wasn't being honest and asking for help when I didn't know what to do. So in the journey of building silver lining over all these years, what I've become incredibly passionate about is advocating for business owners, because they really are incredible. You know, despite the statistics, this is a group of people that are very worthy of investment and support and praise. And also that if we want to help more business owners succeed, it's not just about releasing, more content. It's not just about giving them more workshops. It's actually about looking at what it means to get into the psyche of a business owner, what it means to give robust and comprehensive structure and support in a way that actually gives them a chance of success. And so I believe that anything is possible when we do that.
So you're speaking like the New Zealand Prime Minister here.
Well, I will take that as a very high compliment. That is a very high compliment. I will take that.
Of course, no, but you need, that she is as passionate about her country as you are about entrepreneurship around the world. That's why
I love that. Thank you. I will take that. That is lovely.
As I hear your passion come out of the screen here, since I wish we were doing an in-person interview. That would be such an amazing privilege.
It'd be fun.
But as much as that energy radiates, you remind me very much of the Prime Minister of New Zealand. She is as concerned about every aspect with the woman passion, the woman intuition, and managing such a wonderful country so effectively as you are, trying to manage the world of entrepreneurship. So I just want you to know that. That's how I read as you speak so passionately about it.
Well, thank you. I consider that to be an incredible compliment, probably the best I've ever got. So thank you for that.
Of course. So a part of Carissa is the definition of an entrepreneur.
Yeah.
And the definition of an entrepreneur has evolved from the English word of entrepreneurship to today. So what is in your in your definition means to be an entrepreneur?
It's a good question. I think an entrepreneur is anyone who takes a bold risk, sacrifices sort of their personal security to fight for something or create something from nothing, is willing to take on the burden of the responsibility of that creation. I think entrepreneurship in its purest form, in the form that I hope we can all live in, is an act of service. It's an act of service to the people you hire, to the communities that you serve, and to the economy as a whole. And it's interesting. One of the things that I have a strong opinion about, that certainly not everyone agrees with me on, is that I think the definition of an entrepreneur has been hijacked in the last 15 years. We've become sort of obsessed with these stories of young white men primarily dropping out of college and raising millions and selling for billions. And this story of sort of the Silicon Valley entrepreneur is the story of entrepreneurship that we're all paying attention to. But when you look at all of the economic data, and when you look at so many key factors around sort of how communities grow, how families are supported, how jobs are created, it's oftentimes the small businesses, the people who are not on the cover of all the big magazines, that are really driving meaningful change. And so one of the things that I have been advocating strongly for many years is, let's not diminish the story of a venture-backed entrepreneur. That's a journey, that's a path. There's a lot to be said about that. But let's not forget that the significant driver of the economy, the significant driver of job creation and community restoration is small businesses, people that we don't often think about when we think of the word entrepreneur. But they are, in my opinion, as much an entrepreneur, as anyone else who takes that type of a risk.
Yeah. No, I think you're bringing up a very, very important point. And actually, I address that in the book in slightly different ways, which is the Silicon Valley entrepreneur is a financially returns-oriented numbers game.
That's right.
Right. And so, it's, if you go to the venture capital, you now become a statistics.
That's right.
And whether in 1 in 2, 2 in 10, or 1 in 10, 2 in 10, those are all just mere numbers of it. And the negativeness of that is that what happens to the 8 entrepreneurs who work hard, right, and who do not fall into the category of the success.
Yeah.
But the reality, I just wanted to kind of share something with you, because you are so ingrained in the world of entrepreneurship that most of the time there is a confusion between a founder and an entrepreneur. Right. The founder has the idea, and he potentially trains himself to become an entrepreneur, to manage the business, right?
Yeah.
So most small businesses that are owned by entrepreneurs have evolved effectively out of being a founder to being an entrepreneur.
Yeah.
And a lot of businesses which are venture capital funded, the founder is then replaced with the executive team, and or with even considered the word of professional entrepreneurship, right?
Yeah.
And so that sort of changes. But where I wanted to bring you is that in this book of the what not to do in entrepreneurship, my focus is on such diverse businesses, from movie making to even building candles, to the ability of yourself to help entrepreneurs, to the wine distributions, to the different kinds of broad-based entrepreneurship. I have really tried to, although we are in Silicon Valley, have really tried to contain very minimal of what you would consider as the the entrepreneurship of the Silicon Valley, or that kind of model.
Right.
So because it is not, as you rightfully have said, the globalized entrepreneurship, right? And the book is about what not to do in globalized entrepreneurship. If you had to write a book only on what not to do in Silicon Valley entrepreneurship, it would be a much smaller book, also.
The simple version, the short version.
The simple version of all this stuff, right? So, Carissa, that's so I agree with you. I'm completely aligned with you in the thought process. So now that you have taken the journey, and now you look back in your journey, because you're always, you're always looking, we're driving flat, but you're always looking in the rearview mirror. Just as an entrepreneur yourself, what would you have done differently to be here, to sort of, share with them? Because looking back introspectively itself is very important for a successful entrepreneur like you to share what not to do.
Yeah, no, listen, the reality is, I think that as many things I've learned about what works, I have done the things, that are on the list of what not to do. And I think, that's one of the first things. I spent a lot of time in my first years in business trying to sound like I knew everything, trying to exude confidence, fake it till you make it. And I made a ton of mistakes, because of that. And so the thing that I'm always trying to hold myself accountable to, and sometimes I don't do a great job of it, even after all these years as an entrepreneur, I still, fall into the trap of trying to, know it all. But what I look back on and I think has been most powerful in my journey is when I am the most vulnerable, when I admit that I don't know what to do, or I've made a mistake, or I'm in a situation that I don't know how to get out of or how to resolve. Whenever I've been sort of courageous enough to acknowledge that, to talk about it with other people who either might just have a different point of view or a skill set or a set of experiences, I find my way out of those situations in incredible ways, and I learn from them and I grow from them and I end up better for them. In the moments where I've stayed insular, I've thought that it was embarrassing or somehow too vulnerable to share, is when I've always made my biggest mistakes. And so I increasingly try to embrace, and I have good days and bad days, and I make mistakes and I do it right like everyone, but I increasingly try to embrace this idea that in order for me to actually be my best self, in order for me to be the strongest entrepreneur, in order for me to be the most productive, it actually requires me to be the most vulnerable and humble. And that in that is actually courage. And that's something that is very sort of counterculture to a lot of the entrepreneurship points of view. And so it's something that I try to think a lot about, hold myself accountable to, and then also try to share with as many people as possible. Because it's definitely, I can look back. All my biggest mistakes is when I tried to figure it out myself. And when my pride really got in the way is what it comes down to.
So a part of the book has a chapter on living in humility. And humility becomes a very powerful tool.
Yes.
It is not surrendering.
Yes.
In business, it is the most powerful tool in the growth of business. It's a good tool in the toolbox. So thank you for sharing that tool, that confirming that is also another tool in your toolbox. So, Carissa, as you see the various entrepreneurs in your world, and as you help them, besides cash flow and revenues, which are critical to the underlying part of the business that you treat, what are the three things that you look for in those entrepreneurs that you continuously see that they should not be doing, but it comes over and over again? So, so the readers can see that, wow, this lady has seen so many entrepreneurs, and this is a common fact. So.
Yeah. How long do you have, Sanjeev? Do we have about 5 hours for that list? It's a long list. No. Okay, I'll be organized. So the three things that we see, just literally, it's almost like pushing play and watching something on repeat, right? It's the same. And again, this, you're writing a book about this, but it's the same thing over and over and over again. So the first is what we call, chasing shiny objects. So, we do a lot of work with a business owner to help them get really clear. What do you do? Who do you do it for? What scale do you do it on? And then let's stay focused on that and let's hit your goals. And inevitably, you'll start to see within a couple of days or a couple of weeks or a couple of months, if people are, pretty structured, oh, well, we decided to go do this thing over here. Well, that wasn't in your plan. That has nothing to do with your businesses. Oh, well, we've got this great opportunity over here. And all of a sudden, they're so unorganized. They're pulled in a million directions. There's no strategic focus. And they think that by opening up multiple opportunities, they're increasing their chance of success. But what we see is that when they take their limited time and money, right? You never have enough time, you never have enough money. So when you take your limited time and money, and you start dividing it up into multiple different things, the chance of success of every single one of those things goes down. It's not that you're increasing success by having more going on. You're decreasing the chance that any of those things will succeed by becoming so scattered and pulled in so many directions. So that's definitely number one. Number two, which is, again, I think there's some culture to it. There's some kind of, this idea that being busy makes you important. We call it the busy brag. Oh my gosh, I couldn't get it done because I'm so busy. Oh my gosh, I couldn't get it done because I'm so busy. Oh, I missed this meeting because I'm so busy. And it's this storyline. We call it stage one of being stuck. That actually walking around talking about how busy you are is the first stage of starting to actually get quite stuck and risking success. And so there's this idea that being busy somehow intonates that you're important, or you have so much going on, or you're in high demand. But what we see is the opposite of that. When you let yourself get caught up in being busy instead of being in charge and in control of your time and focused, your chance of success is immediately going downhill. The third thing that I would say that we see most often, or sort of the third trend, is the ability to accept some level of accountability. So in our structure, the way that we support a small business, it's based in behavior change science. And almost like going to a gym, when a small business works with us, they have the equivalent of like a personal trainer, let's call it, the expert that's going to really help them, get fit. And then let's call it an accountability partner. And we see very, very quickly, and I think it's a character thing, the people who give equal amounts of respect to their strategy partner and their accountability partner versus the people who think, oh, well, my accountability partner is less important than my strategy partner, so therefore I will treat them differently. And really that's a comment on character. Do you treat all humans with dignity? Do you accept all types of support? The fun support, the strategy support, but also the support that's really keeping your feet to the fire and holding you accountable. And the people who seem to be open to accepting all of that support from different people of different seniority levels and different perceived importance have a much higher chance of success than the people who sort of pick and choose who they think is important enough or valuable enough to connect with or to build relationship with. So those would be three things that we see really regularly.
Well, very valuable. First of all, the first one in the book, I call it being a kid in the candy store.
Totally. Yes.
Right? and trying to get every candy that is there and thinking, so the other aspect, that the corollary to that is, if you have a small army but thick, it is much difficult to penetrate than I have a one-man army all around the border, and then it's very easy to penetrate. So I fully agree with you in it. The second one, it has something to do, I believe, in the word business. The rest of the world, where you write the word business, it's busi, So people think when they are busy, they are in the world of business.
That's a good point. A good point.
Right. So a part of it is, it's the outcome that counts, not the effort that matters.
Yeah.
Right?
Yeah.
So that is where I think bringing that out is very, very critical, both from you as the interviewee, saying and reaffirming what is being experienced by your clients, and obviously accountability and responsibility is a part of respect for the business person. And that comes, a part of it also comes from just being humble, being humility at heart, right?
It's connected to what you talked about, right? Humility and ego, right? Deciding that you are humble enough to accept input and support from all people, or living in this world where your ego is getting the best of you and preventing you from receiving it.
So you see, this is a slightly differently phrased question for you. You have looked at corporations people all the time, because when you interact with with entrepreneurs, you always are, sort of managing some expectation of their ability to go into the corporate world. So you are always managing that. In your perspective, Carissa, the generation of that people that go in wealth creation in entrepreneurship, and the generation of people, or the mindset of people that go in the wealth creation in corporate world, right? What are the gaps that create that kind of an inspiration or sustainability in existence?
Such an interesting question. It's fascinating. I'll tell a story and then I'll get to the answer to that. About 10 years ago, I created this this thing called the Coalition Committed to Growing Small Business. And I had 10 Fortune 500 companies who all funded this initiative. And then we went around the world and we helped small businesses with that money. So it was a little bit like a Robin Hood strategy, take from the rich and give to the poor. But one of the things that we did in that is we did what we called conversations with corporations. And we got a bunch of business owners, entrepreneurs, to sit in a room with a bunch of CEOs of these Fortune 500 companies. And both groups went into the room sort of thinking that, right, the CEOs of a Fortune 500 company would be the bigwigs, the guys that know everything, the people who are, superior. And these little sad small business owners would be, oh, how cute, the CEOs are going to help them. It literally took about 7.5 minutes for the dynamic to so clearly be the opposite of that. The small business owners, the entrepreneurs were offering ideas and innovation and insights to problems that these CEOs were facing trying to run their Fortune 500 companies. And, I do a lot of work with corporations, and obviously all of our customers are small businesses. And the thing that I think, I see that makes me so committed to the entrepreneur is that when you work in a corporation, you are rewarded. Your success comes from not shaking the leaves too much, right? Maybe you get an award for a little bit of innovation, safe innovation, but you are essentially getting promoted and getting raises by being a company man or woman. You're doing the right thing for a long enough period of time that you eventually get to the top. And most executives that I've met are not necessarily the people that I think have the most incredible passion or ideas or vision. They're really the people that had, quite frankly, the perseverance to stay in one place and outlast other people and sort of do the things that that company needed them to do. Whereas when you look at entrepreneurs that have built something, that have created wealth, that have built something significant, more often than not, it is a huge amount of creativity and constantly thinking outside the box and constantly being called upon to think differently, to solve problems, to come up against something brand new and then do something brand new to solve it. And it's this, again, tenacity and this creativity and this adaptability that creates success. Whereas in the people that I've seen, and many of whom have been quite successful, but the corporate success story is so different than that, right? It requires actually a lack of creativity, a lack of trying to change things oftentimes. And so it requires a very different set of attributes to come to the forefront. And I joke that I try to teach our business owners, and one of the themes that I live my life by is this idea of how, not if. When I come across a problem, I want to be the person that asks, well, how do I solve that problem? Not if I can solve that problem. And I think the majority of very successful entrepreneurs are living in how all the time. And I think a lot of people who are stuck in a more confined corporate structure are living in if all the time. They're managing risk instead of creating opportunity. And it is a completely different point of view. And it's not to say that the people who work in corporate are wrong or bad. It's just, it requires a different orientation to succeed in that framework.
Very, very well put. Thank you. It is the version of the risk mitigation, right?
Yes.
That brings me to the follow-on question.
Okay.
To the entrepreneurship. Is everything in entrepreneur's life, right, is driven by, at some point in time, whether they think it or not, by an exit. And because exit is the ultimate version of wealth creation. I mean, you can create wealth during the process, but most entrepreneurs are driven by the process or the greed of wealth creation. Right? And so you can do exits, you be blessed by God to create a good exit. Or you can design and engineer an exit. So in the journey of entrepreneur, which I share, of course, in the book, but it's important for a conversation here. At different levels of the companies, there is a different level of risk mitigated and the investment of time. And every entrepreneur does think at some point in time when he starts or during the journey that he wants to be a unicorn, or at least most people want that because of the way the word unicorn did exist 10 years ago, but today it is the underlining sort of the drive. And the unicorn is very much in baseball like a home run. So there is a tremendous amount of wealth creation in the singles and doubles.
Yeah.
And so part of the risk undertaking is how to mitigate the risk.
Mm-hmm.
Now, in your journey of SLAP, you observe entrepreneurs, driven by exits. But if you create a shorter version of an exit, which means that when your final dream exists, you place a mirror and you look back in that mirror and you say, what are the things you could have done or you should do in order to create a successful journey?
Yeah.
And then at earlier stages, you can mitigate the risk for lower returns but higher probability of success.
Yeah.
You as the teacher of that, I call you the teacher, your organization, it's an action plan oriented teaching.
Yeah.
What do you see? How do you see this as a tool of creating returns rather than of creating ultimate wealth of huge values of greed? There's a greed versus fear factor again. So share with us that experience.
This is a topic that's very, it's close to my heart. And to be honest, I'm thinking about it a lot, even in this moment. So it's a fun conversation to have. I'll tell you two stories and then I'll get to the actual thought. The first is, I have not raised capital. So I own a SaaS business technology company that I went to the market and I talked to VCs. And when I ultimately got the term sheets that I was offered, I reflected on what it would do to my business, right? It would put me down a certain path. It would give me a certain valuation. It would give me a certain timeline. It would give me certain parameters to hit, to do my exit, to your point, to make everyone happy. And in none of that did I see my ability to stick to my values, which was to be small business first. When I started Silver Lining all these years ago in my little crappy living room, I said, I want to build a company that actually changes the world. I want to build a company that makes the right decision by the small businesses that I serve every day, not by myself or anyone else. And I want to be in service. I really want to build a company that is of service to the world. And so when I looked at those term sheets, it became so obvious to me that immediately if I signed, yes, I'd have this injection of capital, but in exchange for that, I would live in constant conflict between the value of being small business first, my customer first, and the responsibility, quite frankly, that I would take on to create shareholder return. And in a short window of time, right, to get to an exit quickly. So that was sort of one of the first, so I ultimately turned the term sheets down. And that was one of my first moments where I started to grapple with this. Well, what is success? And what does an exit look like? And what is my ambition level if I don't want to take on this capital and then sell and then do the story that we all read about? Fast forward to just actually a couple of months before the pandemic started, I was in a meeting, I was having a chat with a SoftBank funded, very successful founder. So he had built a company that had achieved unicorn status. And we were talking about the fact that I had not raised capital and that I was not driving entirely towards an exit right now, that I had a different definition of success. And he said to me, oh, so you're not as ambitious as I thought. And I said, oh, no.
Quite the contrary, yes.
Yeah, I said, I think you've misunderstood this. In fact, to your point, the contrary. I said, we've just chosen different paths. The path that you've chose has left you with a very small stake of your company, zero control of it, and an incredible amount of pressure to exit at all costs. Not to take care of your customers, but to take care of your shareholders. So the decision that I've made, I still own 100% of my company. I have complete freedom to do whatever I think is truly right for my customers. I can sell my company for a fraction of what you sell your company for, and we can come out actually the same in terms of what we take home based on the equity stake we have. And I said, I'm playing a long game. My ambition is so broad that I don't want to lose control of this, because I'm not just building something that's going to make money. I want to build something that changes the world. And I measure my ambition and my wealth on, yes, money in the bank, sure. Yes, the valuation of the company and my EBITDA and my profit margins and all the metrics that I should be tracking as an entrepreneur. But more importantly, in the number of people that I've been able to meaningfully impact, more importantly in, the lives that we've been able to be a part of, or the change in the economy that we've been able to shift. And so I think, to your point, as you brought it up, I just think we have so much work to do around how we define what success is as an entrepreneur. And it's fine to want to exit. Of course, there's nothing wrong with that. But the way we exit could take 100, ways and forms. It could be passing it on to someone else. It could be hiring someone to replace yourself, but staying on the board. It could be selling it to somebody. But, this idea that the only version of success is a big exit is something I think we really, really need to evaluate.
Well, rightfully said, brings me to the very appropriate question of the existence of abundance of capital.
Uh-huh.
Right. Today, of course, Silicon Valley looks at venture capital, but there is so much amount of private wealth created. And there is, in the book I outlined, there are sort of three broad categories of capital.
Yeah.
The emotional capital, which is, I love Carissa, and here is the money, and I'm sure you will give me something back. Yeah. It's emotional capital.
Yeah.
The angels and stuff. And then there is the extreme other one, it's called what you just outlined. I call it a cutthroat capital.
Yeah.
I don't care whether you give me my returns and you will do what that my returns are. No good or right, just I call it cutthroat. I want to see the impact of that. And there is a whole new set of capital that is emerging, which I consider as logical capital.
I like that.
Right? So the part of the logical capital is to do a little hybrid of what you want to do, which is to create the value for a fair returns, and therefore enhancing the probability of both impacting what your mission is, but also creating liquidity. Now, liquidity or exits are essentially the same, but people think exit means I am gone. That is not what it means.
Yeah.
Exit definitions for entrepreneurs should be that they create a moment of a point in time of liquidity.
Yeah.
Those shareholders that want to take liquidity, they can. Those shareholders that want to stay in, they could.
Yeah.
So therefore, that's the choice. That is no right or wrong. So that's the aspect of the abundance of capital. So in the space of abundance of capital, which I also would like to define as non-controlling capital, how would I, create tools in your background, and we can talk about this later on, but also mention in the book that there is an inspiration, that there is a $20 trillion worth of capital created that doesn't belong to the private equity, doesn't belong to the venture capital, and is not emotional to the grandma. Right? How would we help, Carissa, in bringing awareness to that kind of capital?
Yeah, I love it. I love the language of logical capital. I love that. I'm gonna use that, and I'll credit you when I use it. So this is something that I have been thinking about for years. I always say that when we talk to our small business owners, it doesn't take long for them to complain about their bank or their lender. It's like, it's almost synonymous with being an entrepreneur, that you just, hate your bank. Like they go hand in hand. And the storyline that is so flawed is that business owners and entrepreneurs are too high of a risk, right? And so we live in this world where the story, when you talk about access to capital, whether it's debt or equity, but mostly debt is the lens that I look at it through, is that in order to mitigate the risk of giving money to an entrepreneur or a business owner, we increase the interest rate. Well, how is that? I mean, if you think about it just logically,
Yeah, it
logical.
increases the risk of the failure. Yes. Yes.
Well, you're going to absolutely decrease the chance they can pay it back because the interest rate is higher than their profit margins. And so they're going to go back. I mean, I don't understand how we're not figuring this out. So, you've got illogical capital in the market, and you've got this then self-perpetuating storyline where business owners try to get the capital. They're desperate, and so they take it. The interest rates are so high that they default on it because their business can't sustain those rates. And then it proves to the lender that the small businesses are high risk. That whole system is messed up. And then on top of that, you've got this solution where banks and lenders and economic development agencies are giving small businesses training or workshops or, a 2-hour workshop on how to read a P&L. That's not what they need. That is not helping them. And so now you've got all this investment going into small business without any returns. But it's not that the business owners can't succeed, it's that the support is wrong. We're investing in inadequate support. And so I look at this whole sort of cycle of illogical capital, to use your well-framed word, and I believe so strongly that a more logical approach is to give fair access to capital to businesses who need it, to make sure they can get access to it regardless of things like their credit score and their cash flow, which are going to be bad half the time. If you're building a business, you've probably ruined your credit score at some point. I mean, that's just what happens as you're trying to grow something. And so if we can move capital based on different metrics than credit and cash flow and collateral, and if we can stop asking entrepreneurs to make these incredibly illogical commitments to, do huge personal guarantees to get a business loan. And if we can convince investors that getting a decent return instead of a skyrocket return is actually better than no return, then we can adjust the system and instantly move those trillions of dollars and instantly fund, hundreds of millions of small businesses. So the businesses are there, and I believe they're a good risk. I believe there's no better risk than investing in entrepreneurs. The capital is there, to your point. It wants to move, but it can't. The issue is not that we've got supply and demand on both sides. The issue is that the systems we're using to move it are completely flawed, completely illogical. So, my passion is that we lend based on character and behavior, and we lend at fair interest rates. And we do it in a way where we're securing the money based on a business owner's proof of behavior and discipline and focus, not their mortgage or their home. And then the investors who participate in that accept a reasonable return, not an out of control return, but a reasonable return so that everyone wins. And I think, we've been living in this version of capital, as you've alluded to, where someone has to lose, right? There's a winner and there's a loser in our version of capitalism. But that's not capitalism. That's greed. Capitalism actually has structure for everyone to come out better, for everyone to win, for their fair trade. And that's what I think we need to get right.
Yeah. Well, essentially, Carissa, the fundamental to this process is the risk mitigated execution.
Yes.
Right. Because entrepreneurs have high risks, but those risks can be mitigated. Right. Investors don't want high risk, therefore they go after risk mitigation. So a logic is a resonance of risk mitigation, right? Risk mitigation implemented in an execution plan.
Yes, well said.
Right. And so that's Lisa, you've through this journey met a lot of people. You are an amazing speaker. You connect dots phenomenally fast. If you had to choose a couple of people in your journey who transformed you, who would they be, and what would that transformation be?
I thought of a couple of people right away. So I have a business advisor who's been in my life for a long time named Warren Rustand, and he actually entered my life in a period where I was sort of my least successful version of myself. I had made some big mistakes. I was in a lot of debt. My company was, for all intents and purposes, falling apart. I was embarrassed, and he took me under his wing, and he just said, I see your talent and I understand your situation, but let's work through it. And he got that my circumstance was not my my heart or my character, and he invested in me, which has informed how I operate in a massive way. But he said something to me that was really, really profound and literally changed my life. He literally said, Carissa, you have a lot of talent. I can see your talent, but I don't care. Greatness is a choice. And greatness comes in every decision you make every single day to be the best version of yourself, to do the things when no one is looking, to, have strong character even when it's more difficult. And he just said, I don't think you're your greatest self. I think you need to choose greatness. And he's always held me to that standard. He's unimpressed by my talent. He wants to know if I'm living my greatest self. And he talks a lot about how one's success can be measured only when compared to their potential. So maybe I look successful, but if I'm not living up to my potential, doesn't matter. And so that was a really significant voice that really kind of called me to attention and makes me want to be, quite frankly, the best I can be. That makes me want to choose greatness. I don't want to be less than that. So that was significant. The other one that I think really stands out is a guy named Dr. Henry Cloud. He wrote a book called Integrity, The Courage to Meet the Demands of Reality. And in the book, he talks about how integrity comes from the root word integrated. We think of integrity as being good or bad, moral or amoral, but it's not those things. It's to what degree are we operating from a place of being whole and complete and sort of our fullest selves. And in that wholeness, in that integrated version of ourselves, can we see things more clearly? Can we tell the truth? Can we be, oriented towards what is real and not the stories that we'd like them to be? So this book made a big impression on me, and I cold called him and I tracked him down and I convinced him to essentially take me under his wing and mentor me for a year, which he did, which I'm very grateful for. And we were having one conversation where we were going through where my time was being spent and how I was, almost to a certain degree, it was born of good intention, but it had a little bit of martyrdom in it. I was on 1,700 boards and committees, and I was helping this person over here, and I was giving our services away for free, and I was giving so much, mostly from a good place. Probably a little bit of pride and ego was wrapped up in that. But in exchange for that, I was not taking care of myself. I was not actually taking care of my business. I was not living my best life. And my priorities were out of whack. And he said to me, Carissa, being selfish is not bad. You have to take care of yourself so that you can do your highest and best work. And so both of them, in really kind of different points of view, really have called me to attention to be the best version of myself, so that I have a chance of hopefully living at my best and highest use while I'm here on this earth. And that has been that stuck out to me. It's not been business advice. It hasn't been some big deal that changed my life. It's been this call to reflect on and live into, the best version of myself and be committed to the fact that that is a never-ending process. So
very impressive, very impressive. Creating razor-edge performance.
Yes,
of
definitely.
yourself. Right?
That's right.
Is critical to delivering the maximum out of yourself, which is in a way the similar thing. And you can't have razor edge performance if you have a lot of edges being blunting at you at the same time. So
that's right.
So it's very valid. Carissa, I have asked you a lot of questions.
Mm-hmm.
I think you have earned so much respect of mine through this. I would like to give you an opportunity to ask me a few questions that could also probably enhance the content of this interview.
I love that. Thank you. So, I'd love to just start. What about this book matters to you? What about your personal story does this book touch on, or does it make you want to bring it into the world?
So, I wish I had this book when I began my journey. Right? And a lot of entrepreneurs, the ego is integrated in the process. If you really think of any entrepreneur at any age, especially the inspired and the upcoming ones, you always see ego driving the entrepreneurship. And it means that all the things that you said, I'm very busy, comes out of ego, like you said. Or I can take on the odds, comes out of ego. So each of these elements, including adding infrastructure in business. Why do you need to invent your own robot when you can buy one? Why do you need a machine shop if your own when you can get one? All of these things are entrepreneurial, ego driven base, and it comes out of ignorance of them knowing. So, looking back at the company that I built and managed the challenges with, I absolutely have realized how important it is to know what not to do. Because what not to do is knowledge. What to do is just learning. And if you don't operate from a good strength base of knowledge, then your learning cycles are very long and very expensive. And that was the purpose of which what I decided it would make to write this book and bring people's, not just my experiences, but share a broad breadth of the experiences of other entrepreneurs. So that by clicking on your interview, people can see and learn and feel the passion of what not to do. And if we can bring that, then the ultimate purpose would be to transform the art of entrepreneurship into a science of success.
I love that. I love that line, the art of entrepreneurship into the science of success. I love that. Well, and our program is based in behavior change science, right? And I always say to our businesses, guys, it's hard to be a business owner, but it doesn't have to be complicated. Like there's literally a formula that teaches you how to hit your goals. Like, science can help. There is a science to this. So I love that. Where do you imagine you go from here? Do you think that you'll keep building businesses? Do you think that you'll spend most of your time trying to help others who are in the stages of growing their business? What do you want for the next phase of your journey?
So, uh, I think you ask a very valid question. Obviously, we cannot take any wealth upstairs.
Mm-hmm. Yep.
So during my journey of the building companies, going the market from 25 million to a billion in 4 years and more. And of course, that's nothing today, but at those days, it was.
Big deal. No. Yeah.
A part of my mission was to create wealth for the employees and to the management. Because the one thing that entrepreneurs forget is their responsibility is wealth creation for everybody who participates in the process. And lectures don't create wealth. They create wealth for the guy, Tony Robbins, who speaks, but it doesn't create wealth for the mass population. So if I create ventures, I create ideas, I create concepts based on my knowledge of what not to do, based on engaging logical capital, based on mitigating risks of execution. If I can enable the process of creating more wealth for others in that, then I would have achieved a lot of my mission by setting an example of the process so that they can do the same things in other words. Now, this is a very limited. You cannot do 50 companies at the same time, but you can definitely pull a good group of together. And when you do that, you attract a lot more people to you. They come back to you from the past because you gave them the instrument of the fishing rod, not the fish. So that's my sort of mission. And what not to do book is a part of that process. I'd like to create a community that enables them to answer those questions because when I started writing or thinking about the book, it was pre to the book was I wanted to do something in LinkedIn of hard knocks of entrepreneurship. So I wrote a little paper on hard knocks of entrepreneurship. And during that time, I began to research, how do I get more people engaged? So where are all these hard knocks of entrepreneurship? And the only thing I could find everywhere is some platforms of lectures where you could get the chairman of Nike to come and talk about his inspiration, and everybody would, kind of gather around 100, 200 people. And this guy would get up on the, I'm just making the story up, but just feel, he would get up and say, when I was in Africa and I had no money, I was running up the mountains and my feet were bleeding. And so I took a piece of cardboard and I put some stripes on it. And then that was the formation of Nike. And so it's great, it's inspirational. But how does it affect?
Right. How do you actually
How
apply
does
them?
it benefit the entrepreneur who is sitting there paying, for his time? It's great, inspirational, and I'm not taking it away from the
Yeah.
inspiration. But how does it change? So
Yeah.
that's why I also began to, maybe we can provide them the tools in the toolbox that would enable them to think and to have access to a community. And that was the basis of me beginning to write efforts on what not to do in entrepreneurship.
I love that. I love that. It's one of there's an African proverb that I have in my room and I have everywhere that says, pray and move your feet, right? And I love it because, pray, be connected to a higher calling, leverage spirituality, go get inspiration, get motivation, do whatever you need to do to sort of feel complete and grounded and whole, and then move your feet. You have to take action, right? And action without prayer or prayer without action, both of those are incomplete, right? You really, to be well-rounded, it is both of those things, which is exactly what you're saying.
So maybe you should change the slap to silver lining actions through integrated in players with prayers.
That's, yeah, so that is a little slat it.
Thank you so much. Any more questions? I would love for us to be staying connected, if that's okay,
Definitely.
because
Definitely.
you are a tremendous inspiration to not just me but to a lot of people. And I learned a lot from you today.
Thank you so much for saying that, and
Thank you.
thank you for having me.
Absolutely.